Fidelity Special Values PLC is celebrating its 25th anniversary. Though the trust has been running over a quarter of a century, in that time it has been managed by just 3 managers, some of Fidelity's best known, Anthony Bolton, Sanjeev Shah and currently Alex Wright. Through a consistent investment approach, skillful stock picking by the portfolio managers and with the support of Fidelity's team of research analysts, the trust, which invests predominantly in UK companies, has rewarded investors over the longer term. Andy Irvine has been chairman of the trust since 2016 and he's been speaking to my colleague Claire Dwyer.
Andy, one of the really striking things about the Trust's 25-year heritage is the consistency of the investment approach. Why has it been so successful?
Well, I think first and foremost, we're very fortunate to have 3 outstanding managers. Anthony started off the Trust, and when Anthony was coming towards the end of his tenure, he brought Sanjeev into the fold. Sanjeev trained under Anthony, and indeed so did Alex train under Sanjeev and Anthony. So there's that consistency there, and I think we've been very fortunate in that we've had 3 outstanding individuals who have been very patient. They've had a tried and tested formula, and it's worked not only for Anthony but also for Sanjeev and for Alex as well.
That tried and tested formula, the contrarian approach, why has it worked?
You try and buy a stock when it is fundamentally cheap and it has the ability to recover. And then, of course, you've got to get your timing right because you don't hold on to your stocks forever. You've got to get your timing not only for your entry to the stock, but also the exit as well. But Alex and Sanjeev and Anthony before him, you know, they've had the backing of a very good team round about them. They've got a number of analysts. They're extremely professional and diligent in how they analyse their stocks. They don't always get it right. There will be times in the cycle when there's a little bit of underperformance, but that's only expected because no one gets it right 100% of the time. And I think we've been very fortunate in that we've had 3 outstanding managers. They've stuck to the same formula over 25 years, and mostly the Trust has outperformed year in, year out.
Trust Chairman Andy Irvine there. And I'm pleased now to be joined in the studio by Alex Wright, the current portfolio manager, who's managed the Trust since 2012. Alex, welcome. We heard there from Andy about the Trust's strong performance since its launch in 1994. Could you tell us a little bit about your process and how it's contributed to that?
Yeah, so the process is very important to the Trust, and it's very much the same style that's been adopted since the launch in 1994, so a contrarian value style. And what that means to me is looking at companies that other people aren't looking at. And generally that's because there's some kind of short-term issue with these companies, and where the skill in the process is identifying where the market's got it wrong, and actually these are companies that can recover. And because of that contrarian or differentiated view, there can be very strong stock price performance if you get that process right. And really that's what has been the driver of that strong long-term outperformance of the market over time.
And just reflecting on that process, could you tell us a little bit about the research and the analysts and how that works?
So I think the analyst team at Fidelity is a great team, and it's very important to this process because I think while buying the cheapest stocks is a great starting point and value stocks over the long term have generally outperformed, I think particularly in today's world where there's a lot of disruption and structural changes in the economy, you really have to deep dive into these companies and do due diligence to make sure you're not buying structurally impaired companies, value traps, you're buying companies that can turn around. And the analyst team is key to doing that deep dive on each of the companies, making sure that genuinely there is an opportunity here rather than just a cheap valuation.
And does the fact that it's a trust is structured as a company, does that make a difference to you in your process?
So the closed-end structure is very useful because it means that you've got a constant permanent pool of capital and you don't have to worry about investor inflows and outflows. I think that's really useful, particularly when you've got a contrarian mandate, because unfortunately often those cash flows occur at the wrong time. People give up at the bottom or buy too high, whereas here with the constant pool it means we can hold our investments through to fruition, which can take 3 to 5 years. So it gives you the ability to buy more liquid companies but also be patient on the holdings. So it's a very good investment structure.
And where do you see the opportunities just going forward from here?
So I think it's widely known that today the UK stock market is out of favour on a global basis. So actually from a contrarian point of view, the UK I think is a good opportunity today, particularly versus other stock markets or other asset classes which are expensive. Some of the biggest opportunities are in domestic UK facing stocks where people are most worried about the UK economy, but also there's international opportunities here too. So 75% of the FTSE All Shares earnings actually come from outside of the UK. So you've got good global companies available too at cheap valuations compared to other markets. So there is a lot of different opportunity available today across sectors and across the market cap spectrum.
Thank you very much, Alex. Of course, investment is about looking forward and not looking back. But given the Trust's history to date, we have no intention of changing the investment approach and philosophy that has served shareholders so well for the past quarter of a century. For more information on Fidelity Special Values PLC, please visit our website. The address is on the screen now. Thanks for watching. Goodbye.